A mixed bag for the big banks. JPMorgan down 2%, while Wells Fargo and Citi were slightly higher, and investors clinging to every word now the CEOs had to say on their conference call. So it's time for a new segment called Word on the Street, where the traders tell you the most important thing they heard from the CEO that you might have missed.
Is it a game show?
You see that?
Oh, it's just
slow scroll.
Yeah.
Very
slow scroll. Had to
Bob Barker
do my thing.
Or Joker,
and the triple. It was a Wink Martindale. I think it was long mic. All right, so you wanted to point out what Jamie Dimon said about higher rates in the economy. Let's take a listen first.
I was also pointing out that I'm just about probabilities that rates can go higher. People should be prepared for that. They should not be surprised about it. So I'm always surprised when people are surprised. And the why is more important. Are you still growing? The economy is strong. Rates are going up. Most of us consider a healthy normalization and going back to a more of a free market when it comes to asset pricing and interest rates, et cetera. And we need that. So to me, overall, it's a good thing.
All right, Karen.
Yes.
Your big takeaway was what?
Well, so a couple of things. I mean, there was nothing to hate in this earnings call. The bar was low. I thought they jumped over the bar perfectly well enough, and yet the stock traded down, which is disappointing. But the thing that was actually interesting to me was that Jamie Dimon really stepped back a lot on the call. Normally, he's very, very involved in the calls. You know, he knows the businesses so well. He can't help but jump in and make comments when people ask questions. He did, by the way, do a separate media call that we could not hear. But on this call, it really was Marianne Lake. She was really running the show. This is interesting to me because this is setting up for the succession plan. I believe
you think
she will be
starting to set the table?
Well, she's been a great CFO for a long time. What?
And time to run?
That's a separate call. But I think she did a fantastic job, as she always does. I think that's what's happening here. He is setting up Marianne Lake to become his successor. I think that she's incredibly qualified, but I also think, this is just my own opinion, that he would like to have a woman in that role. So to me, that was a very interesting takeaway from this call, that he is stepping back more and more from these calls, and she's really handling them, and she does a superb job.
That's a good point. I mean, look, also what he did say on the call is he talked about uncertainties from economic and geopolitical. I mean, he is thinking about the impact of tariffs in this trade situation that we are in.
I think Jamie Dimon has as much credibility in terms of painting a proper, balanced picture of what's going on, and certainly also said that the economy is in very good shape. That's why rates are going higher. So let's be clear. The trade in the banks, to me, is it usually takes about a week in a normalized environment that we've had for the last 5 quarters. Banks have actually rallied substantially about a week after, as we've gotten into the quarterly earnings report. They lead off. There's some skepticism. Banks have had record profits, including JPMorgan. They're giving capital back. The balance sheets look great. Even if we're in a credit storm, have they ever been better prepared? And we're not in a credit storm.
Yeah, and when the 10-year guy is at, I don't even know what it finished today, 316, 17, something like that. It's been going down since it hit 326 or whatever the top was. That doesn't help, right? It makes it harder to make the case to own these bank stocks, doesn't it?
The XLF topped out in the fall of 2017. The market until last week or so has only gone straight up, and the banks can't get out of their own way. I mean, we could talk about the environment, you know, steepening yield curve, narrowing yield curve, doesn't seem to really matter. The stocks don't want to go higher. So at what point do they start to go higher? This is not, I mean, I don't want to make the same comparison, but auto's pretty much the same thing. They've been a lot worse, but they've been in the best environment ever. They can't go higher either. So at what point do the banks start to go up? I've been a Goldman Sachs bull, but I got to tell you something. Stock trades awful. Morgan Stanley made a 52-week low this week as well. So JPMorgan best in breed is at what point, though, in valuation terms, is that expensive?
Do you own JPMorgan?
Me, no.
Would you? You wouldn't own JPMorgan?
I think JPMorgan trades.
Why do you like Goldman?
Because I think JPMorgan right now trades what, about 1.7 times price to book, not tangible book.
It's the
price to book. It's expensive.
But not on a PE
Deserve
basis.
to be.
Not
on a PE basis.
10 times forward, but if that's the truth, we had great data today. Where were the buyers?
They should trade there.
Where were the buyers today? That's the bottom line. They were trading for eight hours.
I mean, what did you want? Like,
but where have the buyers been? Where have the buyers been every time these guys report?
That's the problem.
Well, to me, it comes down to, as an investor, especially if I've got a longer-term horizon, I feel very comfortable with that valuation. I feel very comfortable with that balance sheet. I feel very comfortable with that management team. And frankly, you know, I don't need it. I'd love to see it have been up 20% in the last year, but I'm not looking to sell a stock because it's underperforming a market that's been moving a lot higher.
Anything else you're comfortable with while we're at it?
You know, this shirt's comfortable. It's
I was going to ask you if you were comfortable with the shirt.
Yeah, thank you for asking.
Okay,
I feel
you're
good
welcome.
about it. I'm comfortable with myself.